Morning, ladies and gentlemen. This is Greg McCloskey from FXDD. This is Monday, April 5th, 2010, New York Opening Forex Report. Let me remind everybody that currency trading is risky and should only be done with risk capital. That will not change your lifestyle. Traders could lose all the risk capital trading Forex. FXDD doesn't guarantee any recommendations made within its commentary. Traders can make market assessments to take trading positions based on their own personal market analysis, risk tolerance, and financial condition. In addition, care should be made to only use ledger which is congruent with your personal risk tolerance. Although care was taken in creating the sport, FX does not guarantee the accuracy of the information. We do have our next webinar. If you go to forex.fxdd.com, that's http://forex.fxdd.com http://forex.fxdd.com. Forex.fxd.com. Our next online class will be on Tuesday, April 6th at 4 p.m. You need to go to our website and click on this register for the next online training, and it'll direct you to that site so that you can register. While we are seeing the pound sterling moved sharply higher over the weekend, the move was off of some more favorable polls for the election, putting the conservatives 10 points ahead of the Labor Party. This helped the pound sterling along with some better data over the last few days. So focus started to a week or so. Focus started to move back to the pound sterling after the better than expected non-farm payroll numbers last week. So when we go in, take a look at some of our charts. We'll start off with that pound sterling. You can see how the market gapped higher here over the weekend and move back above our bottom trend, the bottom trend line of this channel that we are in. If you recall, on Friday we broke below that channel through the employment number, came down to this support level 151.81, and then started its move. Well, we had the gap move to the upside here. The gap move took the price back above that old channel, and then we started to use the old channel line as support, and the market fell back through early in the New York session. We are starting to move back higher after coming down and testing this 152.26 area. There was support there on Friday. We actually broke through that trend line at that level at that point there. So the market came down. Remember that area, and it starts its move to the upside. Looking at the 5-minute chart, seeing if we have any clues from that. We are more bullish on the 5-minute chart as well. We just broke above the 100 and 200 bar moving average on that chart, which comes in at the 152.45 level. Those two converged, and the market started to move higher from there. So we're at 152.56. We'll be watching this 45 level early on. What is of significance here is that we do have this gap from Friday's close, which came in around the 152.05. The low for the day came in a little bit around 152.22. So we do have some room to the downside that we have to go and fill as to fill that gap off the sterling versus US dollar. So we'll be watching that very, very closely. On the top side, once again, we do have we're going to have some resistance up here at the old trend line. I would think that comes in at 152.97. We do have resistance also here at the 152.84-ish type area. That's near this highs. Near this high coming down off the low comes in around the 80 level here. So I'd look for initial resistance up here at 80 in the sterling versus the US dollar. Let's move on to the euro versus the US dollar, and for the euro, we also saw a moved spike to the upside here. Took the price back up to the 135.37 type area. You can see that there's some resistance up there. It is one of our remembered lines, and the market broke through the upside there on Friday, came back down, or on Thursday, came back down through that level on Friday down to our support line, and held that support line. We were looking at that 100-hour moving average on the weekend report. The market broke through that level, and that caused the market move back up to the upside. Since that time, the market has moved back down, coming back through that 100-bar moving average, and remains below that 100-bar moving average, which is also corresponding with this trend line. This trend line connects the low, and lows from Friday here. So this area is going to be a key level for the euro versus the US dollar. Comes in around the 134.96, 97 type area. So watch that level on the top side. Currently pricing and trading at 83, and so I would expect some sellers against that level. Again, probably against the 135 level. Might as well use that level. Nice big round number for the euro versus US dollar. Take a look at the 5-minute chart. We are below the 100 and the 200 bar moving average. That 200 bar moving average comes in at 96. The 100 bar, and that's where that the other resistance is, and the 100 bar moving average comes in at 90. So we are moving up toward the 100 bar moving average on this 5-minute chart. Again, let's use a 135 level as our key level on the top side. Stay below that level, we should be okay. Let's go move on to the dollar versus yen. On a hourly chart, we are seeing some sellers in the dollar. Supposedly some export sellers are taking advantage of the higher dollar rate and selling it earlier today. We are coming down to this channel trend line, which comes in at 94.34. Is also was a flourish type area that we saw here on we had a floor here on Friday, and also was a floor here earlier today. So that level is going to have increased significance with the trend line also coming up higher, the upward sloping trend line coming up at that level. So let's move our Fibonacci. Let's move this up toward the high for the day. That would make more sense. 38.2%. We break this level, we could head on down toward the 92.76 level. On Friday, we did break this old trend line. This is off the number. The number came out a little bit weaker than expectations, but then if you look at the private number, or not the private number, the public employment gains was much stronger than expected, and that's what caused a move to the upside here. So the 76 level is going to be a key support level, 38.2%, and you can also see the 100-hour moving average starting to move up toward that level. Let's take a look at the dollar versus Swiss. This is trading mainly in between our goalposts here. Our goalposts are defined by 105.86. The top side is defined by 106.30. If the market moves above this 06.30 level, we should starting to see some move to the upside. If it breaks below this 86 level, we should see selling in the dollar versus Swiss early today. And we'll take a look at the dollar versus Canada next. We drew these channel lines in just kind of roughly. We broke through those levels on Thursday, moved back above them on Friday, and held the old channel line. So we are kind of testing that bottom side at par 57. We did make new lows here for the dollar versus Canada at par 52. The previous low was 60. We had 65 on a Thursday, and with today's dollar weakness, the dollar Canada is moving lower today. Perhaps we're going to head on down toward that parity level. That parity level that the market's been looking at for quite some time. Parity in foreign exchange terms, of course, means 1.000. Finally, the Aussie versus US dollar saw some increased moves to the upside. We're stay above the 100-hour moving average. On the downside, we're going to be watching that level at 91.85. We also broke above this 91.94 level. If you look back at time, you look at a number of different times. Put a horizontal line at 91.94, folks. That's a key level here. You go back in time, and there's a lot of different areas where the 91.94 level held support or provided resistance, and including on Friday when the market moved above that level and then came back down below that level, but now the market is back above it and now looking to test that support at 91.94. If we break through that, we're going to have to break through the 100-hour moving average below at 91.85 in order to solicit additional selling on the downside. Today there is a holiday a lot in Europe. ISM non-manufacturing composite in the U.S. comes out at 10 a.m. It's supposed to be 54. Pending home sales also come out at 10 a.m. the minus 1%. Also, there's a Fed meeting this afternoon, early this afternoon, and they're supposed to discuss the discount rate, or that's the rumor that they may increase the discount rate another 25 basis points. We will see. As to that, more of that later. All right, this is Greg McGlosky from FXDD. We'll talk to you later. Bye-bye now.